to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Frivolity. Let's see, I should probably pull up that YouTube page to see if there's anybody actually even over there. Welcome back to what is this? This is our daily brief video free offering that we like to do. Yeah, good 20 minutes, half hour. I suppose sometimes I go a little bit longer. Today is Tuesday. Which means it is TRI CTO day. We have Sjord on the call for the after party. And frankly speaking, Sjord is probably one of the smartest people I've ever met in this crypto space. So if we really wanted to get sort of the skinny on crypto, technology for that matter, you know, Sjord actually wanted to buy NVDA at $20 a share. Can you believe that? And I think I talked him out of it. I think I was like, well, I don't know whether that's a reload zone or not. Anyway, so Sjord's got a bevy of ideas that are all working right now. And of course, they're just going crazy. So if anything, we are so lucky at TRI to have our resident crypto expert, aficionado analyst. And also, he's actually the brains behind bringing my 1980s website into the 21st century. So let's see. Has Sjord joined us? Hey, there he is. Hey, Sjord, you ready to have an awesome conversation with these people here today?
Yeah, looking forward to it.
There you go. So hello, sir. I guess good afternoon, good evening. Actually, I was talking to somebody in Russia today. And, you know, when we actually have our opening range trade getting up first thing in the morning, it's actually evening for them. So go figure. Anyway, as you can see across the top of our banner, and of course, I think our marketing department would appreciate that I remind you on a regular basis. We do have a Black Friday deal for everybody who is interested. Both whoa, look at this, they're making updates on a daily basis. It seems to be changing all the time. But our professional dashboard, I think we're calling it the Pro package now, with all of our TA screeners, our breadth indicator, which we're still trying to figure out a name for it, and of course our proprietary, actually even Sjord built sort of an algorithm that filters the top 30 crypto names, and we have an index of that we follow, and we use that to help us trade the breadth reading for the crypto space, and actually it's done pretty well. Julian actually went and did a whole bunch of back testing and data accumulation on all the signals that have been produced over the past couple of years on the algos for both the stock market and Bitcoin, and the numbers are actually quite impressive. So by all means, if you have the opportunity, take advantage of it. As you can see, the regular retail price for our dashboard package, we're not giving this stuff away for free anymore, folks. We did give a special deal to TRI veterans. That is gone now. So if you weren't able to take advantage of that, your new ultra low sale price right now, as you can see, under $1,000, which would be like under $100 a month, which for this kind of signaling package and the amount of money that you can make on these signals, this most recent S&P 500 signal, we've had a bunch of people say, geez, I just took this one trade and it's actually paid for an entire year subscription. So there is that available as well. And I highly encourage, really, even before you should subscribe to something like the Pro Dashboard, if you don't know what you're doing in the market and you want to learn how to effectively run and manage a small business of trading with the expectation that your small business is going to be profitable, I would highly encourage you to get your butt into the school program and learn how to run an effective small business of trading, including identifying what type of risk taker you are and how we're going to build your plan around you as an individual. And then, of course, all the fancy, what is the macro situation, which way are money flows moving, and then, of course, we teach you a whole bunch of different technical analysis tools and indicators that I've built over the years to try and help me trade, and a couple setups that I really like to use, one for range trading, one for trend trading, just to sort of get you going. And, of course, all of our new students, they're required to build all of the support tools that you really should have in place if you want to run a business of trading with the expectation of turning a profit, versus, hey, yeah, this guy on social media says this thing's going to go to the moon. Let's just go and get a mortgage on our house and go and buy that. Oh, it didn't work. Oh, shit happens. Looks like we lost our house. No, we don't do that kind of stuff at TRI. So anyway, point here is, if you want to learn it the right way. You want to learn how to do this correctly. Get your butt in the school. Then once you have this skill set, then come over and own the market with our pro trading tools. So anyway, Black Friday deals up and running. So I would strongly suggest you take advantage of that if you can. Kind of a wonky market state right now, as you see from the breadth indicator for the S&P 500, the broader U.S. market. We're still working our way higher. We are heading into a holiday weekend environment. So we should probably be cognizant of the fact that we're probably going to have a bunch of position squaring. This is just a lower time frame day trader chart. Probably the best chart to work with you guys, something like a daily chart here. I was actually thinking that maybe we'd make an inverted head and shoulders. I don't know. And this would be an interesting sort of study over time. Is that enough of a consolidation to consider this a right shoulder? I don't think so. And I had drawn on these head and shoulders studies in the past. I think what's happening here, believe it or not, is this is nothing more than just a really simple. Actually, I think I want to go off of that high. A to B, clone that, C to D. So it looks to me like they want to take this market right back up. Interesting. Look how there's a cute little price gap right up there. And actually, that's a concept that we teach in our advanced trader programs, the level 2 programs. After you've sort of learned how to build trading plans and manage yourself and understand the basics of setups, etc. Now, then we start teaching you a whole bunch of fun stuff in the candy store, like how do you use price gaps to help you identify trade locations. So interestingly enough, harmonics, this happens to be a concept in our level 3 program. But you can sort of see how all this stuff works together to paint trade location. And it looks to me like they want to take the market up, probably clean out all these liquidity pools up in here. Nice easy shorts that they can bust out, rally it right back up against the old highs, and then roll it over. That wouldn't surprise me one bit. Anyway, as you can see, stock market's a little bit soft here today. Do have a pretty big earnings announcement coming out after the bell. So I do believe a lot of people are probably position squaring ahead of this. This has been sort of a market darling of late, this NVDA. And if you start looking at our technical indicators, you can see Willie is now officially overbought again after completely dumping here through that last celestial window. And actually interesting too, pushing to new highs here in price, but you can actually see the momentum is kind of waning here. We do have a big earnings announcement coming out after the bell here today. So the question ultimately here is, do we, launch our way higher because they just went and earned a shitload more money? Or is it a trap and they dumped the market? Probably a good idea to maybe let that big fundamental event come, but don't be surprised. You can see all the gaps. There's a gap there, gap there, gap there, gap there. Don't be surprised if this thing actually does have to come back down to earth. And you might even find in this screwy trading environment, you might even find it turns out to be some crazy ass thing where the market violently spikes higher and then actually has to come back down. This is extremely dangerous stuff right in here right now. And I don't really have anything like setup wise to actually justify acting here. I think you probably just ought to let it play itself out. So having said that, this is a big sort of unknown, huge market rally following that eclipse window. I mean, Jesus was so textbook, it's ridiculous. But I definitely think, what you're going to, we're heading into a really weird environment here. Tomorrow will probably be a regular trading day. There is FOMC minutes that are going to be released here in probably about an hour and a half, an hour and 45 minutes. Usually over the past, let's say 6-8 months, the market's actually rallied into those minutes announcements. The minutes, of course, are basically what is the Fed actually thinking about interest rate policy at their most recent meeting. And the scuttlebutt is that they are starting to sort of talk about maybe we are near the end of this interest rate increasing path. But I think I've shown you this before. I mean, I don't think thinking that we're near the end of this interest rate increasing path is really outlandish. I think that's probably, it would be probably a good thing, thought pattern. The only question is, how does this interest rate path sort of turn? And I think I've talked to you guys about this before. My belief, for whatever it's worth, is that this turn is actually going to look something along these lines. It's not going to be just straight down, straight up, and in this case, straight up in interest rates, then straight down. And in fact, we have a political event year coming up here, and the Fed doesn't really want to be perceived as affecting the election process. Now, we all know that's a load of horse shit, but nonetheless, somebody who doesn't participate and watch these videos and participate in the market and have 30 plus years experience in the market, they wouldn't understand this stuff. And they would actually, probably a lot of people it would be interesting to like see a poll, but I'd be willing to bet like Joe Sixpack doesn't really participate in the market too much. I bet they probably have a pretty good sort of perception of Jay Powell and what a swell guy he is for protecting us and looking after us. When, of course, we at TRI, unfortunately, we have where our bullshit meter is toned down. We kind of sort of see through the fog, and we realize, of course, these central banksters that since 1913, they've been playing society like a fool here. And this is where this big debate comes in, because guys like Druckenmiller publicly come out and say, if you actually see what Janet Yellen is doing, you'd say, why on earth is this person at this job? They can't literally get this job any wronger. And then you hear the Federal Reserve, the way that they talk publicly. I mean, everything that they say that's going to happen in the economy, basically the exact opposite has happened. So are these people this stupid? Could they possibly be this unintelligent, earning like 6-7 figure incomes and they're the pillars of our society? Could they really be this dumb? Or is this maybe all part of the plan? And nobody's going to hold them legally accountable for their absolutely horrific stewardship of our society. But it plays into the bank's hands very nicely. This is exactly what the banks want. And in essence, they're getting exactly what they want. The Great Reset, Klaus, and all that crap. Do I need to start going on about substitute drama teachers? Well, maybe let's leave that for today. Anyway, so my hunch is that where our path is going to look something along these lines, where by the time we actually get to sort of next September, October, November, and we're heading into the big US presidential election, we probably have completely forgotten about the Fed. And the conversation is going to be like, oh, well, the Fed hasn't done anything again. What a big surprise. So anyway, that's my 2 cents with regard to what we should expect out of Fed policy going forward. I am starting. There's one gentleman that I have been sharing videos on the site. I really like listening to him. I think he's got a pretty good head on his shoulders. And he's actually talking about how the market is now actually expecting a little bit of a reprieve sometime around the middle of May. My hunch is that it's going to be mostly just rhetoric, the Fed talking the market up, the Fed talking the market down. But ironically enough, when it comes to actual interest rate changes, I don't think you're going to see a hell of a lot of changes. And one thing that he pointed out, I won't go in too much into more detail about him, but if you look at, you've listened to Jay Powell talk a lot recently about the big problem with the inflation right now is housing and the cost of housing. And then you look at actual rent inflation right now, and rent inflation is running at about 7 to 8% in the United States. So there's no way in hell the Fed can lower interest rates with like the biggest sort of monthly cost to all the working slaves rising at a 7 to 8% annual pace. There's no way they can lower interest rates in the face of that. So anyway, that's my 2 cents there. Today's data, today's econs, man, this past week, as I said, we're heading into this U.S. U.S. holiday. And my hunch is that once we sort of get probably about halfway through tomorrow's session, you're going to find everything just stops. And other than the fact that NVIDIA's got a pretty big earnings announcement this evening, you're probably going to see some fireworks around that to kick off the session tomorrow. Once that's been sort of digested into the market, I think probably you're going to start seeing everything just slow right down in through the U.S. holiday weekend. Because Thanksgiving falls on a Thursday, really, Friday, yes, is technically open, but it's going to be messy here. And if anything, this is a perfect opportunity for the 1% to fuck around with things like crypto and the and all that. So with regard to econs today, it's kind of a mixed bag. Interesting, the Canadian inflation data is starting to sort of come back down. We actually have a core rate being printed here. Actually, core rate ticked up. So obviously they haven't, totally slain the beast. What I'm worried about, of course, like I just said there about housing inflation numbers, if anybody starts declaring victory on this inflation war, then I think inflation comes right back, just storming really, really strong. Interesting to see, even new housing price indexes. New housing, I think I've told you before, maybe not so much Canada, but definitely United States, new homes are actually considered like the most valuable asset to invest in around the world right now. Canadian data, I think the Canadian market is way overvalued. And, if we are in a commodity bear cycle, which I do believe we are, that's going to kick the wind out of the Canadian sort of number one sort of export market, their oil. And I wouldn't be surprised if you have the Canadian dollar fall. And I've talked about this lots. I think Canadian market's a short, and it will be for the next 10 years. Out of the U.S., Chicago Fed National Activity Index came out this morning. You can see it came out quite a bit less than expectation. So I think on balance, the Fed is getting what they want. The only way that they can really control the market is through short-term interest rates, which is absolutely killing sort of the basic economy. The problem is that this damn housing market, because they've gone and securitized housing, which they never should have done, after the Great Depression, they actually put a whole bunch of rules in place to make sure that the banks were not involved in the securities industry, to make sure that the banks did not securitize the mortgage industry. And basically over the next 60, 70 years, the banks just step by step, methodically bought the politicians and undid all of that regulation. Now we live in a world where housing is securitized. And of course, you see how much pain there is out in our society right now. It's really not fair to Joe Sixpack the way that these bankster crooks have done this. But what can we do about it? Get used to it. It is our 21st century capitalism. Interesting to see retail sales, Johnson Red Book, kind of downplayed of late. This used to be a really, really important indicator back 20, 30 years ago. Anyway, you remember Druckenmiller, he got all excited about retail sales, and that's what this Johnson Red Book's all about. You can see it actually has ticked up almost a 10% increase from last month's reading. So that's going to be inflationary. It's going to be tough for the Fed to lower interest rates in the face of that. I think probably the bright spot here, it's not so much if you are interested in buying a home, it's not so much new home sales. Because as I said, new homes say as soon as new homes come on the market, the Black Rocks and all those jerks of all, they just come in and just gobble up those assets instantly. And they buy like 300 homes on a track. Boom. Here's $1 billion. Merry Christmas. It's really the existing home sales market, which is interesting. These hedge funds and stuff, they don't want to touch existing older homes with a 10-foot pole. And you can see that existing home sales, this is like the public participating in the market, they're just absolutely collapsing, right? And I would make the argument that this is the part of the economy that the Fed can control, and they are seeing their desired effect, right? Chicago national activity, manufacturing is falling off, retail sales is kind of, the red book here shows an uptick, but on balance, retail sales is softening. A lot of this sort of the consumer-based economy data and existing home sales, it's coming in pretty soft, but we're in this sort of, which part of the, like the Fed can only do one tool, crank short-term interest rates, but they can't like go after the Finks of the world and specifically say, stop. They just can't. So they have to keep playing this game and hope that at some point these institutional players start, cooling their appetite, but they're not. So anyway, the point of the matter here is getting very, very conflicting information from things like new home sales versus existing home sales. Try and digest it as you can. All right. I mean, I don't know whether I'm giving you guys any value here today. I sure hope I am. But there's sort of your backdrop of econs right now. I think the message just repeatedly is institutional inflationary data, very, very strong. Consumer-based data, extremely weak. Institutional players going to keep the, like I said, rent inflation extremely high, prices just completely unrealistic given annual incomes. Fed is going to shit on the consumer and just keep hammering home more bankruptcy, more pain, more shitty life for you, consumer, in the hopes that that eventually stops the institutional boys, but I don't think it will. But anyway, that's another conversation for another day. There's your backdrop, what happened here econ wise today. I would say that obviously within the crypto space, we've had a bunch of interesting developments through the day. The headline that sort of started the day was the SEC was going to come out with a worldwide shitting on crypto. Excuse my French. I don't know how else to describe this. And this is the good part about the TRI Lounge is we're very, very active. People posting lots and lots of information. And of course, we've been on top of this all through the morning. Everybody's been posting tons and tons of links towards all this and what's happening. And then, I don't know, maybe about an hour or so ago, they came out with sort of the official word that, Binance is going to settle with the SEC. And as soon as that rumor started to persist in the marketplace, that actually maybe this whole thing is just, again, the politicians, the SEC, the headlines, right, are, to try and get everybody acting emotional. U.S. announces international cryptocurrency action statement, blah, 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 nonsense. And the end result is CZ just cuts a check and then he says, get the fuck out of my face. You guys are pissing me off. And so what ends up happening with Bitcoin, we're dumping all through the morning. Oh, it's the end of the world. It's the end of the world. Then CZ goes, fine, here's a check, get out of my face. And the goddamn market just takes off like a rocket. So if anything, great, what's the expression? Example, I guess, for better or lack of a better term, that the SEC, to all intents and purposes, is kind of like a paper tiger now. Yeah, I mean, they come out with all this bluster, but at the end of all of this, as you can see, Bitcoin sort of like, yeah, that was just a big nothing burger. Boom, back up we go. Is it interesting that we were having some other conversations on the site? A lot of people that follow this on-chain analysis. I did see this headline that kind of caught my attention. The PUELL multiple. I'm not quite sure. This must be the name of the person who actually came up with this study, but like on-chain analysis stuff. They're kind of this particular indicator is kind of warning that maybe we're near some sort of top. I don't use that information in particular, but it was just kind of interesting that was coming across the headlines. I know for quite a while we were looking at NVT. I don't know whether this is the same thinking or not. It might be different. I honestly don't know, but I did pull it up here. Maybe I got rid of it, which would suck. Oh, darn. Oh, by the way, there is a gentleman who is in the lower mainland. So if you happen to be in the lower mainland and you're in Richmond tomorrow, we're thinking about maybe having lunch out in Steveston on the wharf, give them an idea of what sort of Pacific Coast life is like. If you happen to be in the neighborhood and in the lower mainland tomorrow, maybe join us for lunch. PM me if you're on the site and you happen to be in the lower mainland, you'd like to join us. Nick, you probably remember Nick from when I did the videos, the weekly crypto videos there with some site members. Remember, we used to have the Benkoff check, and we had Derek from Maryland, and Nick. He was building a house, and he said, I'm going to come back when crypto's back in easy mode, which I think was an incredible call. Anyway, Nick is in town if you want to meet him. We're going to have lunch tomorrow. So just FYI, if you happen to be in the lower mainland. But getting back to our conversation, here we are. Is this the same kind of thinking? I don't know. But this is the NVT study. And as you can see, I mean, we're definitely not flashing Bitcoin is cheap. It is another anecdotal piece of evidence that the network itself, when this gets all red like this, it's pretty stressed out. I think this is a really, really good anecdote of, if you really want to invest in an asset, you want to try and force yourself to invest when the public is not interested. Hey, there he is over on the YouTube page. Hey, hard made easy. That's Nick. So anyway, back to our conversation here. It's at some point in your sort of market experience, you are going to come to the realization that sometimes assets get overvalued. And, as an investor, I mean, you can always trade setups, but as an investor, maybe you ought to just heed the warning signs. And when this indicator looks like this, and it's down at the bottom end of the range, well, that's when you want to actually go, okay, you know what? I'm going to make a serious investment in this asset. So, take it for whatever it's worth. Take a screenshot of this. See if you can build this indicator yourself. Actually, we have the Bitcoin price on here as well. And you can see, when this thing turns, Bitcoin usually has a pretty good rally. I mean, it's not a bad timing tool. But at the same time, too, I mean, can you respect this message that, this thing's not cheap right now? This is pretty damn expensive. Probably actually in the after party, we'll have on our crypto expert, Stuart. Maybe I'll even ask him what his impression of this study is. But, I don't know whether you use things like, as I said, I thought this was interesting on this crypto, what's it called? Crypto Panic, that news aggregator site. They're talking about how on-chain metrics are starting to flash problems. And then we were talking about the NVT study here on the site in our member lounge. earlier today, and I got to say, I mean, that looks very dangerous to me. So is Bitcoin breaking down here today? I don't think so. I think actually our algo is kind of wishy-washy. It's ridiculously overbought. I mean, I'm not going to go into too much detail on these free videos about that. If you are interested, join the site and maybe consider subscribing. I will say that if this M, and you can see how through that FUD about the SEC this morning, if this M actually does fire here, that's going to send a huge warning signal to me. It hasn't. You can see how we dumped violently here this morning and then sort of springboard our way back up. I still think, for the record, that we're just sort of sitting in this no man's land here. We could very easily have one more pop to the upside. We could very easily puke out here on just somebody sneezing and saying the wrong thing. But do I actually have any sell signals working here in the short term? No, we came damn close. And when I saw this candle all the way down here, I was like, oh boy, something's brewing. But then, like I said, as soon as CZ said, to hell with that, here's your check, just get out of my face, that whole thing just evaporated. So I would still say the same comment I've said repeatedly of late. I think the market's just stuck in a trading range right now and going sideways. With regard to alts, did see a little bit of market coming off here. Where's the best place to show you that? So like these charts, if we go through the list, you can see a little bit more red than green. But at the same time, too, I'm starting to see green coming back. You can see there's a few names that are perking up. And, as I said, we'll have our conversation with our resident crypto expert. I mean, his names have just been absolutely killing it of late, but it is interesting to see that 2 out of his list here are starting to actually turn green again. So I don't necessarily have a sell here on crypto just yet, but I will say market is ridiculously overbought. We're in nosebleed territory. I like the idea of you spoon feeding the market. It is interesting to hear that BitterX Global, and if you have names that are only listed on BitterX Global, like this silly little Ubic that I picked up, getting absolutely destroyed. That was a big sort of FUD thing here this morning. I get the impression that Shitterix is kind of yesterday's story. I don't think a lot of people in the space are even participating in it anymore. So, is this sort of the final swan song for these kind of names? Could be. And if anything, excellent testament. You never put more than 5% of your money at risk in any one of these names. And I'm getting my head handed to me on this little Ubic that I picked up here recently. Yeah, it's how it goes. But on balance, if you're not part of that Shitterix story, like if you're over here on, well, actually, there is a bit of red. I'm gonna say that, but it is interesting. Like I know a lot of people were interested in names like, well, you know what? I'm gonna save this for the after party. Let's just leave it off with market is very overbought. If you did get in off the bottom on a lot of these, for heaven's sakes, I sure hope you're paying yourself for your hard-earned effort. Market hasn't broken yet, but at the same time, too, we're awfully late in this rally. So just be careful, people. And for heaven's sakes, don't chase, don't chase, don't freaking chase. This maybe, if anything, just wait for prices to come back down into reload zones, and then we can start the game all over again. In fact, actually, there's a bunch of names that I want to buy, but they've jumped up a little bit too much. I want to buy this guy, Mana, Decentraland, get him back in with Paris, down at the bottom. So just got to be patient, wait. Sis, same thing. I always love these guys. I want to buy, got to wait for him to come back down to the bottom. Kusama, same thing. Top, you can see where the bottom is. Got to wait for him to come back down to the bottom. RLC, this was one of my favorites from last cycle. You can see where the bottom is. Got to wait for it to come back down to the bottom, etc., etc., etc. So, okay, let's leave it at that. Super excited to hear what's on Sjord's mind here today. Slow and steady wins the race. PMA for the win. Don't take no win nickels. Remember what your number one job is. All the best. And bye for now. Take it.